Yo guys, welcome back to my channel, and this is Saint KFX, and I will be taking you through the knowledge, forex knowledge, beginners guide, ideas, trading ideas, and on the long run we'll be taking trades as well on this channel. All right, this we have right here is it's a weekly chart on a synthetic. This is a synthetic trade. This is volatility 150s, which is different from the currency trades where you have the gold XAUUSD, where you have the Euro USD. But this is synthetics because we have synthetics, we have the forex, the foreign exchange, and we have the stock trading. So this is the synthetics. This one is a 247 active a platform for trading, for traders. It works all around the clock, like 24 hours 7 days a week, or like the forex market that closes every Friday. It opens on Monday, closes every Friday, you understand. But this is synthetics. It's opened all around 247. It's traded by mostly the African countries and some other few countries. So what I will taking you through today is the how to read a forex chart. How to read a forex chart. So looking at the weekly time frame on this chart, what we are saying now is okay. I'm sure you know what we call these what these are called. These are called candlesticks. Whatever it is, this green bar is called candlesticks. They are called candlesticks. All these are called candlesticks. So how do you read them is what I'm going to be talking to you about today. I'm going to be making my videos very brief and short, so to be understandable, and it won't take much of your time. So we are talking about how to read a forex chart. Now what you are saying is in the markets, in the forex market, what we have a buy and you have a sell. So you are either buying or you are either selling, or you are doing nothing at all. So you are buying when the market starts going up when it's going up, and you are selling when the market is coming down low. For example, here this market is coming down. So that is why I want to read how, I want to understand how it is. I will say it's coming down. Do you understand that it's coming down? So I'm going to be making my videos very easy to understand and to be very short and simple. So how do you know if this market is coming down? It's very easy. Now, for example, this candlestick, this market has been selling for a while. We have this long red candles which shows down, down. It's coming down. This candle, this red candle is sell. It's called bearish candle because it's sell. The red candles are called bearish candle because it's a sell. You can decide to use any color when you're professional enough. When you get to understand the candlestick, you can decide to use any colors you like. So this one is a sell candle. Any candle that comes down is a sell candle. It's a bearish candle. It's a bearish candle. And the one going up, this green going up, these are bullish candles. They are called the bulls, while the reds are called the bears. The green ones are called the bulls. That's the bullish candle. So now this is a sell market because it's been coming down all the way. It's been coming down all the way. You understand? From the top to down, it's coming down all the way. So what we have here is a sell market. So we call this a sell market because it's all the way down. You understand? So it's all the way. So it's called a sell market. Now, how do you read this? How do you read this? Yeah, it's very easy. When you look at the market is breaking. You can break the market into different, like three. You can break the market into three. First one, we have a range market. A range market. We have an uptrend market, and we have the downtrend market. The downtrend market is an example of a downtrend market. For example, when the market starts coming down, that's an example of a downtrend market. And an uptrend market is when the market starts going up. I will show you in a bit. I don't want this video to be much. I will show you in a bit. But for example, this is a downtrend market. And how do you know a downtrend market? A downtrend market is when there is a constant break of structure to the downside. And there's a constant break of structure to the downside. That is where it is called a downtrend market and a bearish market. We call it a bearish market or a downtrend market. So it keeps breaking structure to the downside. These are market structures. How do you say it? For example, from here, from the whole way down to this spot, It's a downtrend market. Now we said this market, forex market, is broken into three different ways. We have the downtrend, we have the range. The range is when the market doesn't go up and it's not coming down, but it's just within a specific position. It's just trading inside of this box. It's the range. Inside of this box is called the range market. So it's both buying and selling. You can, from all the way down here to this, it's trapped into this rectangular box. That's why it's called the range. So when the market hits this place, it bounces back up. Hit this place, it bounces back up. Hit this place before it breaks out. You understand? So from here to here to here to here to here, it's a range market. So there's no breakout of this structure. So as I've said earlier, this is a structure. From here, down here, up here, down here is a structure. Up here, then down here is a structure. So, and this structure is called, all the way down to this place, these structures are called downtrend. So it keeps breaking structure to the downside. So it's a bearish market. That's how to read this chart. It's a bearish market. The same thing, and I've said earlier on, I'm giving an example of a range structure as well. A range is when the market is trapped in between. It's trapped in between a rectangular box. It's not when they say the market is trending. The market is trending when it has a break of, when it consistently breaks structures. That's when it's trending, and that is when you want to be in the market. That's when you want to start selling, and that's when you want to start buying. So when it consistently breaks structure like this, then you have a trending market. But when the market is trapped in between, inside a rectangular box, then the market is in a range. It's in a range. When you see something like this, you're supposed to watch and analyze from a bigger time frame to see what are the possibilities of having or taking the trades here. So this is a downtrend market. If you're to read this chart, we are reading it as a downtrend market. Now let's see where we can get a bullish market. Let's delete this. Okay, we can just easily leave this structure. We can leave this structure here. Let's see if we can get an uptrend market, because here we're still having, okay, now let's go to more lower time frame so we can get an uptrend market here. Let's go to 1 hour time frame. For example, do we have an uptrend? Okay, yeah, there is a very good example of an uptrend market. Sorry that I'm doing this fast because I don't want this video to be long. I just want it to be short and understandable. So let me delete this line. So here we have here's a perfect example of an uptrend market. How is this an uptrend market? These are the structures, as I've said earlier on. If you consistently breaking structure to the upside, then you have an uptrend market. What are the structures? Here are the structures that have been broken. For example, here's a structure that was broken to the upside. Here's a structure that was broken to the upside, and you can as well see that different structures breaking to the upside here. So this is a structure broken to the upside, makes it an uptrend market. Sorry, these lines can be, I'm just trying to make it very fast. Can make it straight if I want to, but so these are different structures. And sorry, this particular platform, which is the synthetics, you'll be having different, because the price is fractals, the market is fractals. As the time goes by, when you start understanding this thing, you understand what I mean by when they say the market is fractals. So sorry that you are seeing different candles, and this is how if you're a professional, you understand how to read this market or how to read these candlesticks. But as time goes on, I'm going to teach you more and more about candlestick. But for people who just see this blah blah blah, you see this, that they say, what is all this, no, these are the market structures. These are what you need to read and understand. You need to understand this before taking your trades. If you don't understand these things, you get issues, you make mistakes with these things, then you lose money when you make mistakes. You need to understand every bit of it, how the markets move. You need to understand every bit of it. Yes, how the market moves, you need to understand. Now, what I said by uptrend market, when it consistently breaks structure to the upside, You understand? When it consistently breaks structure to the upside, then it's called a trending market, and it's an uptrend. It's a bullish market. Bullish market, remember, bullish market, when it consistently breaking structure to the upside, it's called a bullish market. One, it can be called an uptrend. Two, and it's a trendy market. Either it's breaking to the upside or it's breaking to this downside. It's called a trending market. But when it's trapped, as I've said earlier on, when it's trapped between a specific rectangle within, it's not breaking up, it's not breaking down, then it's a range. From here, you can see from here, it got up here, it came down, it did not break instantly, it got up here, it came down, it came down, it got up here, it came down, you understand, got up here, it came down, then it broke here, you understand. So this, from this point, it keeps hitting this spot, it couldn't break out of this spot, it kept hitting this spot, it came down here, it didn't break out here again, it came down, it couldn't break out here again, it came down, and it couldn't break low. So from here to here to here to here, all these are called range. So the market, you can say the market is in a range. So when you are in a particular position like this, what you do is you wait and look at the higher time frame to check the possibilities, and if this market is going to break out or is going to break below. You understand? Or you have to keep waiting. So remember, there are key things you need to understand in this market. When the market is trading up, that's when you want to be caught. That's when you want to be in the trade. But when the market is being ranging, is when the market is ranging, then you don't want to be caught in this trade. You just want to watch and see what is going on, except when you are in the trade, probably on a bigger time frame. You know that this market is going to break up from here to here, then you took the trade here, and you're expecting the market to reach here. So when you're caught in this trade and you know what you're doing, you can leave it here. You can leave it and let the market keeps breaking structure to the upside. So the basic thing I want you to understand from this that I try to teach you today, and for example, again as well, you can notice that this line you're seeing here is called a moving average. This is a 50 moving average, a 50 period moving average. We're going to talk about that as time goes on. It's a 50 period moving average. So when you see this line, when you plot this line, another easier way to know that this market is on an uptrend or a bullish trend, you see this moving average trending to the upside. That shows it is an uptrend. Then you know you are reading this chart. This is the easiest way to quickly read the Forex chart. So when you are able to get this one for the very first time, for first glance, you're able to get this, then you understand, then you are halfway through your analysis. You are halfway to taking your trades. So first thing first, you need to understand the chart, the structure. The structure is very important, which you need to understand. So I think you should know how to read the Forex charts by just mere watching these few clips. So that should be better, and maybe as time the next video I'll look for what else to talk about, probably how to break the candlestick pattern. But just stick behind, you understand, keep checking my page, keep checking my channel, and wait for what I'm going to be posting next. So I'm sure I'm trying to make these videos very, very short and easy, and explain to you. So if you think there's something you want me to talk about on this my page as a beginner, and you want me to explain to you very well, very, very well, or you want a one-on-one training from me, no problem. You can hit me or send me a message, or you can just comment under this video below. Comment under this video below, and I'll get in touch with you. Thank you very much. Bye for now.